D Street cools off after a strong start with the Nifty back near the 24,100 mark, but still going on to slight gains. Broader indices move in tandem as IT sees strong outperformance while pharma, durables and private banks lag. Wipro rises after company expands its partnership with Google Cloud to accelerate enterprise-wide adoption of Gemini Enterprise and Agentic AI. Firm will also equip specialists with advanced AI capabilities to help clients move AI pilots into large-scale deployments. Metropolis Health outlines a growth-led roadmap targeting 14 to 15% medium-term revenue CAGR and 27 to 28% EBITDA margins over the next 3 years. Metropolis also plans 100 mini-hubs and remains open to disciplined M&A. Tejas Network shares sharply higher after the company received a letter of intent from TCS for supplying equipment for BSNL's 4G mobile network. This single order is bigger than Tejas Network's entire existing order book. Ather Energy shares jump as Hero Moto is set to further increase its stake in Ather, with the company approving an investment of 1,758 crore rupees. Hero's holding is expected to rise from 29.88% to 32.8%. And stellar debut for Tempson's Instruments on the listing gains of over 110% to the issue price. The stock opened at 634 rupees a piece on the NSE against the IPO price of 300 rupees. And it began trading at around 631-ish. Which marks 110% premium, the best return for an IPO in 2026. Investors await Federal Reserve Chair Kevin Warsh's speech at the annual Jackson Hole Symposium due tonight. Traders watch for signals about where Warsh believes interest rates could go next. Nepal's flash floods death toll crosses 450, with more than 1,400 people still reported missing across Nepal and Tibet. Nepal issues a fresh warning of another flood surge after satellite images show a lake forming at the disaster site. Rescue operations in full swing. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Very quickly, how markets are faring today with just about flat, but where's the zing? The zing is all in IT, 3.25% in terms of the move on IT. When you're looking at the way in which stocks have moved, TCS and some of the heavyweights really pulling their weight. But Coforge is the top gainer, 6% higher on Coforge. LTM is up 4.5%. Persistent up 4%. TCS up nearly 4% as well. TechM, Oracle, Wipro all seeing gains. Emphasis is the worst performing stock on the Nifty IT index with a gain of 1.7%. That's just the texture and the manner in which we are seeing a move within the IT pack. When you're looking at the overall market as well, you're seeing decent gains across the board. You've got the top 5 IT counters within the Nifty being the top 5 gainers. But outside of that, Bajaj Auto, 2% higher. Apollo Hospitals up 1% or thereabouts. The advanced decline is largely 1:1. HDFC Bank also clocking in gains of around 0.8% thereabouts. Some bit of a relief coming in for shareholders of HDFC Bank. Asian Paints down 1.5%. ICICI Bank, ITC and Ultratech are some of your big losers in trade. Now, before I go and try and dissect sectors, let me go across to Avi. He's here with some of the stocks you want to keep on your radar for this afternoon's trade.
So let's have a look at some of the stocks that are buzzing in trade, starting off from Tejas Network. That is buzzing on back of a huge order win worth 1540 crore rupees from TCS. That is for supplying installation materials, accessories for the BSNL 4G network on a pan-India basis. We can see that the stock is up by almost 9%, and that is because of the order win of 1540 crore rupees. Up next is Ather Energy, that has been buzzing on back of news that Hero Motor Corp is going to invest 1750 crore rupees of additional equity in the company, and that will increase their stake from 29.8% up to 32.8%. Hero Motor Corp is being very bullish on the Ather bet that they've taken quite long back, as Ather is performing very well in the e-two-wheeler space. We can see that the Ather Energy is up by around 6 to 7%. Up next in our list is Wipro, that have accelerated the partnership with Google Cloud, and they will be pushing the adoption of AI across their company for employees to be AI ready for the future businesses. Up next is Acme Solar, whose wholly owned subsidiary Acme Suryodaya Private Limited has commissioned a 250 gigawatt hour capacity of BES in Jaisalmer, Rajasthan. This takes the total capacity commissioned of the subsidiary, which is Acme Suryodaya, to 1350 megawatt per hour. Our last pick would be Sterlite Technologies, that has transitioned 4 Maharashtra plants into 100% green power and is expected to reduce scope 2 emissions by up to 65%. They've also integrated 100% green hydrogen into glass manufacturing to reduce emissions, and we can see some strong buying inflows in that stock as well. So these are few of the stocks that were buzzing in trade for the day.
Okay, thank you so much for that, Avi. So that's really the texture. But let me also bring on board Kunal Bothra, as he always does on closing trades. Kunal, great having you. Let me first start off with the index itself. Flattish on the index, right? I mean, we'll come to IT in just a bit, but the index still very sluggish.
Yeah, very sluggish, very flattish. And I think we are just continuing the series of the sideways range what the markets have been showing over the last, I think, few weeks, few days. We're still stuck at the 24,000 mark. It's just that we're not breaking below the 24,000 levels for the index. But then, you know, those odd outperformances which come across from each sectors, they manage to shield, protect the markets, and sort of act as a support for the indices. So I think net, I think we are looking at the index consolidating over here. This consolidation may continue for the near term. The levels which you're watching out for is a pivot of 24,000, but the critical support for the index is at 23,800.
Okay, so that's with regard to the index. But Kunal, just in terms of the sector bias and IT in particular, how is it looking?
Yeah, it's looking extremely strong. So we're making this point that IT stocks are going through a patch of time-wise, price-wise correction for 2 or 3 consecutive weeks. Previously, the IT stocks went through a time-wise correction. Now the stocks are making a very good comeback. I sense that I think this is now potentially could be the second leg of up move for these IT names. But you know, within the IT pack, when you look at this, the likes of Coforge, I think the stock is very, very close towards breaking a lifetime high. Persistent, I think, is off by its highs by 2024 highs by a margin of, I think, around 600, 700 points. So when you look at this comparatively, it looks like that I think many of these mid-cap IT stocks are now leading the charge and the large-cap IT stocks are chugging along.
Okay, and is there a stock pick that you have within IT, Kunal?
Yeah, I think Coforge is something which continues to look attractive at the current levels. 2,000 plus is where the stock has crossed in terms of the price level. Looks attractive at the current juncture. Would look out for a positional target of at least 2,100 for the stock price. Stop loss to be kept at 1970. And even I think KPIT Tech around the 600 mark seems to be finding a good support. This is more like a pivot support for KPIT Tech around the 600 levels. I think closer to that, I would believe KPIT Tech could be a good buy. Targets on the near term, I would probably keep it closer to 650, 660 and stop loss at 575.
Some real solid targets coming in for both of those. I wonder how Tata Tech is looking on charts, because that's the other big buzzer in trade today, Kunal. Actually, it's all over IT, but that move on Tata Tech also looking strong, 4.5%.
Yeah, it's a completely changed stock, you know, Harsh, because I think you look at this from the last, I think 4 months or 5 months back, March lows, March lows for Tata Tech, when the stock was at 525 approximately. From there, you know, the stock has gained very good traction. We've seen good volumes emerging for Tata Tech. The stock having a tendency to try and absorb the correction and then come back into a counter rally. This week also, for example, the stock is now forming a classic bullish hammer pattern, that too after 2 consecutive weeks of price correction. So, you know, these comeback weeks for the stocks like Tata Tech indicate that we are looking at an uptrend in the making, and these dips or these bottom formation zones are the ones which traders should lap onto.
Okay, so that's the tilt, but we'll still be on a very short break, come back, plenty to speak about, honestly. It's all about bottom-up stories, right, in a market like this, and we'll try and get you better perspective as to how do you play the market at this point in time. Stay with us.
Welcome back. You're watching Closing Trades, and let's look at what the month of September looks like. September seasonality points to a mixed picture for Indian equities. The Nifty has averaged a 0.27% decline in September over the last 10 years, with negative returns in 5 years. Shesha joins us with the trends.
Well, yes, although September is considered to be a month of festivals, clearly we have seen little cheer on Dalal Street over the last few years. And let's put the spotlight on the kind of returns we have seen in the month of September historically. Let's start with Nifty 50, just about flat over the last 5 years. And it has ended in the green 5 out of the last 10 times, which means the probability stands at about 50%. Mid-cap index absolutely flat. Small cap index also flat with some bit of negative bias, down 0.6%. And that index ended in the green 5 out of the last 10 times. So clearly, September turns out to be a very soft month for Indian equity markets. But let's put the spotlight on individual sectors and the kind of performance that we see for individual sectors. And at the top of that list, we have energy. We have seen quite a bit of returns at about 1.6%. Followed by auto, we have metal, pharma and realty. Realty, of course, is in the red marginally, IT in the red. And on the other side, we also have FMCG Bank, PSU Bank and financial services. All of them have given negative returns in the month of September historically. So that's how September shapes up for individual sectors. Let's also try to understand the number of times these sectoral indices end in the green. Auto has ended in the green 8 out of the last 10 times, followed by pharma at 6, FMCG at 5, bank at 5, and a couple of other sectors, including financial services, energy and metals, which ended in the green 5 out of the last 10 times. So the probability of these indices ending in the green this time around in the month of September also stands anywhere between 50 to 80%. So yes, September is expected to be a somber month based on how September has panned out over the last 10 years.
Thanks, Shesha, for that. So it's not, it's a flat month. That's what the last 10 years of average depicts, basically. Kunal, how do you look at September? Means, are you going to see some bit of index movement, or it's going to be a sleepy index?
I hope that we don't extend this flattish kind of a move for the indices. At least there's some sort of a trend which starts off. But it's very difficult to say prior, because in the month of August seasonality, it was expected that the markets on an average does 1.5 to 2% plus. So far, I mean, we still have, I think, 2 or 3 days left for the August month to end. We're down by 1.5% on the index. But I think it's not just about the price performance. I think it's the dismal participation across the large cap stocks, the lack of commitment and participation dropping into those key individual sectors which are not seeing any major follow through. That, I believe, is the concern for the benchmark indices. So, if you try and compare the large cap stocks and the mid cap and the small cap, the mid caps and the small caps have done exceptionally well compared to the Nifty 50 benchmark. So that, I believe, could be the trend. Hopefully, I think we will just break this trend and the benchmark index also starts to come back into a trending up move.
Kunal, just hold on. We are also joined by Sachin Trivedi, who is the Senior Vice President Equity at UTI AMC. Sachin, a flat September is what historical averages suggest. Where do you see the index from a fund manager's point of view?
Sure. So thanks a lot, first of all, for inviting me. I can't, of course, get into prediction of monthly movement. That will be difficult for me to call out. But essentially, my reading about equity markets is basically both from earnings perspective and from macroeconomic perspective. We are somewhere in the bottoming out process. Maybe we were, maybe because of the war and a couple of other issues, we had a big situation. We had fears with respect to El Nino. Maybe that situation is still developing. But I think we should be able to sail through both, let's say, from FCNR perspective, whatever money that we will generate. All of that should help us sail through an economic front. Anyways, we are doing better than what was expected. Even on earnings front, I think if we look at the commentators said, small cap and mid cap have done better because BSE 500, if we look at last year earning or even the Q1 earning, there has been a good double-digit performance earnings growth. So I think somewhere there is a bottoming out process in terms of equity market. And of course, the valuation, especially on the large cap side, has really become compelling now. Even you look at from a very longer term perspective. So my sense is that gradually we should be started to inch up from here on. So maybe if you ask me, my mood will be on a positive side.
Uh, Can you also give us a sense of the sectors where you're going to see that some kind of movement coming in, Sachin?
So let's start with two larger sector on the Nifty front. The first, if you look at the Nifty 50 itself, maybe around 40% odd outcomes come from your financial services, where the banks have a larger contribution. I think from banking perspective, we all know that last couple of quarters, the loan growth has been quite healthy as far as system is concerned. There was a bit of concern with respect to cost of fund. I think that with surplus liquidity, that situation is also getting addressed. So my sense is that whatever pain for 125 basis point cut that we had seen in last 1.5 year, I think that should start to bottom out. Yield should start to, or maybe the NIMs for the system should start to bottom out, and maybe if there is a rate hike, that should start to improve. And that's where I expect maybe from H2 onwards, at least in the lending side or the large private sector banks should start to report double-digit growth as far as that space is concerned. So that's a solid, good chunk of the Nifty that will start to perform very good starting H2 on the earnings front. The next space that we're talking about is basically the IT as a space that's again having a 10% odd contribution. Even in that space, we all know that for last 3 quarters, there are a lot of concerns. And because of that, the valuations have also got corrected. And that's pulled down the performance of Nifty altogether. But if you look at the construct of the earnings for last 3 quarters, there have been upgrades as far as earnings are concerned. The deal win rate for the entire space, at least the larger one, has been quite healthy. So my sense is that even from this space perspective, anyways, the earnings should start to inch up, and therefore the re-rating should also take place. And then on the consumption side, I think post GST, anyways, we are doing good. And maybe there, but my still preference would be more towards, let's say, the consumer services space rather than just the traditional FMCG kind of outcome. So I think these are a couple of spaces where you certainly have good visibility why Nifty can start to do better than what it has done in last 2 years.
We're seeing the IT index up nearly 3% in today's trade. Is this just a corrective mode that it has been correct? It has corrected so much, so there's a bargain buying which is coming into play, or do you really see something turning around for IT?
So certainly, see, I think maybe post, I think February, there was this discussion in the entire space that there is no terminal value in the space because all the agentic AI and all the AI platforms will do all the work on their own. But gradually, basis the deal win rates and basis what the results and the discussions that we keep having, there is a gradual realization, or maybe there is definitely a realization in the system that if the token rates are coming down, you need somebody to go and implement these LLM models so all the enterprises get benefit of that. So I think that just realization is turning the table, and the now discussion is that no, there is a terminal value in the all these companies. What we need to just focus is what would be the growth rate. And for that growth rate, I think the current valuations are justifying hardly any growth which has been factored in. So that's where the upside case for all the IT space, that from here on, definitely there is a terminal value in those companies. Plus, if the growth starts to accelerate, that's where that's where I think the money will be made for the investor. So there is in last 4 or 5 months or 6 months, there is a complete different basis the actual reality. There is a different outlook on the sector altogether.
Another sector which is has been active in the past, and you're seeing a lot of volatility is the Nifty defense. That's also one sector where A lot of exposures are there. If one could argue that they are sitting on a huge order book, but also on a high valuation as well.
Sure. I think that's where I will say that market to an extent is completely focused on what's going to be the earnings delivery as far as the some or most of the companies in the listed space is concerned. So despite some of these companies having a large order book, but some of these prominent companies have disappointed as far as earnings outcome is concerned, and which is where in some of these large defense names we have seen some sort of a consolidation as far as these names are concerned. But there is a good amount of action which is happening in mid and the small tier, where there is a good amount of earning growth which is taking place. So I would be I in as far as this space is concerned, definitely I would be positive, but I would be more selective as far as earnings delivery is concerned, and basis which I would want to go and take my exposure in this space.
Mm. Uh, Sachin, consumption, that's also a theme which was working for some time, but we're seeing some bit of volume and value coming back after in the last one quarter. The numbers of some of the companies have not been so bad as expected. Do you see consumption to now get a revival here?
So maybe within consumption, I would broadly divide this into maybe three buckets. One, the traditional FMCG companies. I think there is good amount of there is a decent penetration, but the core problem with this industry has been expensive valuation compared to what they have delivered and what they can deliver in next couple of years. And which is where I think in the FMCG space, my problem is that valuations are still quite demanding, although they may, because of the input related issues, input cost related, they may report double digit kind of a top line growth. But still, fundamentally, I'll still think that from longer term perspective, growth will be far below what is keyed in the valuation. So that's one space I would not want to be quite overweight on that. But there are exciting opportunities on the consumer platform businesses, which is where good amount of growth is happening. They are also beneficiary of not just the penetration of the services. They are also beneficiary because if the underlying commodity prices are going up, goods prices go up. For them, the net realization also goes up. So that's one space I'm excited about. The other space is, of course, consumer discretionary item, because there is a good amount of spend which is happening as far as consumer discretionary space is concerned, which is also you alluded to, be it the AC or some of the other spaces. I think that's one space at this point in time has seen some bit of margin pressure, but traditionally or in past we have seen initially these companies take the brunt of the raw material margin, but gradually they increase the prices, and which is where they will start to improve their profitability going forward as well. So even in this space, the consumer discretionary, there is a good amount of volume which is anyways improving and should further improve, and the profitability should follow. So even auto would follow or fall in this category. So maybe consumer discretionary, including auto, falls in this positive bucket, as well as the consumer services. But I would maybe try to avoid the FMCG kind of a space.
And from a fintech space, I mean, you spoke about platforms in consumer, but from fintech point of view, do you see some of the players holding off, and the inflection point for many of them?
Certainly, some of these business leaders are quite dynamic in terms of trying to price their product or their services very well, and maybe later on basis the behavior of the customers which they acquire, they're trying to sell them a good number of services on that platform as well. So again, you have to be quite selective. Of course, the valuations of some of these companies are quite demanding, but basis how these managements are running, there is a case for people to be actively or positively looking at these names.
Sachin, it was a pleasure talking to you and getting your perspective today. Thank you very much for joining us on
Thank
ET
you. Thank
Now.
you.
Thank you. But moving on to an issue which has been there with respect to the personal insolvency of Subhash Chandra. Subhash Chandra has hit back at reports on personal insolvency case. The SL Group founder has rejected reports that he faces 22,000 crores in personal claims, saying he was only a guarantor and did not borrow from lenders. Chandra says claims by objecting creditors stand at about 3,900 crores, of which 620 crores has been settled. He says borrowing entities have already repaid nearly 43,000 crores and that his 6.5 crore repayment plan reflects his current personal assets. Listen in.
उस दिन लगभग 45,000 करोड़ का देनदारी हमारे पूरे ग्रुप पर थी। उसमें से 43,000 करोड़ लगभग हमने चुकाया है। बाकी जो 2,000 करोड़ कहीं कंपनियों की जिनके एसेट लायबिलिटीज़ में गड़बड़ थी और थी, उस वजह से वो रुका है। ये जो विषय एनसीएलटी में हुआ तो वो केवल और केवल मैंने पर्सनल गारंटीज़ कुछ लेंडर्स को साइन करके दी थी और मुझे नहीं पता क्यों, पर कुछ लेंडर्स के पूरे पैसे भी चुका दिए गए थे, लेकिन उन्होंने भी एनसीएलटी में अपने क्लेम दाखिल किए। किसी कारण से किए होंगे, होने नहीं चाहिए थे। बहुत से केसेस ऐसे हैं ये जो टोटल क्लेम जो 22,000 करोड़ रुपया लोग बोलते हैं, केवल 3,900 करोड़ के लगभग था। और जब हमारे ग्रुप की टोटल देनदारी 45,000 की है, 42,000 उसमें से दे दिया गया, 43,000, 2,000 बचा, तो बाकी 3,900 कहाँ से आ गया? चलो खैर जो भी है वो आया भी। इसमें से करीब 2,000 करोड़ ऐसे लोगों के हैं जिन्होंने कभी पर्सनल गारंटी इन्वोक भी नहीं की।
Welcome back. You're watching Closing Trades, and let's look at what's happening in the F&O market. It's a quiet market for the cash market, but lots of stuff happening there. The Nifty is absolutely flat, but open interest is up nearly 2.1%. For in F&O for Nifty Spot, which is the September series as we speak. So premium of nearly 176 in the Nifty Bank space. You seeing it's marginally negative. There too we have seen some long position unwinds and some shorts getting added. Premium of nearly 400 points. So look at the constituents of Nifty Bank and you'll get an idea of what's happening there as well. Short position in ICICI Bank, long unwinds in Canara is seeing a short position, Kotak is seeing a short, and IDFC First is seeing a short. So there's something happening in the Nifty Bank space, except for HDFC Bank, where we saw yesterday some long unwinds happening. Today there's a long build-up coming up for HDFC and SBI. So that's something which is holding off the Nifty Bank. But look at what's call and put writing is happening, how the total OI is moving. We saw the call writers cross over towards the 11:30 or so, and they have an upper hand. So the put call ratio is currently trading at 0.88 for the Nifty. And if you look at how the open interest change is happening across strikes, you have some build up coming at 24,100 for put writers, and 24,000 is acting as a good support as well. But equally, you are seeing some build up that happened in the last 2 hours in 24,100 and 24,200. So the distribution will show you that you have a good resistance coming in at 24,200 with some support 24,100 and 24,000 for the Nifty. Among the gainers in futures, you have Ether Energy, which is up 8%. There's a product launch which is happening on Saturday. Maybe the stock running up ahead of that. Coforge is up nearly 5.5%, and KPIT is up 5%. So long build up happening in Coforge and KPIT. The TVS Motor is seeing some correction happening, 3% down. Kalyan is seeing a long unwind, and PTM is seeing some short build up in today's trade. Open interest gainers include stocks like Ether, 36% jump, as I said. There is the product launch, and I think the street is actively looking towards that product which is there. It is today the third largest EV maker in the two-wheeler space. Sagility is up nearly 17% in open interest. A long build-up, Singh and Havels is seeing a short build-up in today's trade there. But let's look at losers. Kalyan is seeing a long unwind. Astral is seeing a short covering, and Dixon is seeing some short covering as well in today's trade. Look at some of the most active. HDFC Bank 720 September call, premium up 1.35. There's an unwind of 22,000 contracts there. Futures trading at 721 at this point in time. So there is some resistance coming in for HDFC. Their TVS Motor 4200 September put, again 40 rupees jump in this premium. That's a sharp jump which we are seeing, and open interest up of nearly 1.79 lakh contracts. So we are seeing some short positions getting built in TVS. So that's the scene with respect to of the FNO, where Nifty is just flat and Nifty Bank taking in red as we speak. But Merrill joins us with stocks in news. Merrill, some of the news makers of the afternoon.
Right, so these are all of the stocks that we're seeing in the spotlight today. First up is Coforge. The company has expanded its strategic partnership with Pega in order to accelerate enterprise AI transformation. This partnership will be focusing on helping enterprises adopt AI-led solutions at scale. Foseco India is also in focus after a large block deal worth about 679 crores. Shares were sold by Morganite Crucible and Morgan Terrasen, with buyers including SBI, LIC, Motilal Oswal Mutual Funds, Mirae Asset, Invesco, and many other institutional buyers. New India Assurance is in focus after receiving a 781 crore tax refund. This is from the Income Tax Department for the assessment year 2022 to 23. And finally, TVS Motors is also in focus. Payman Kargar has been appointed as the company's new director and CEO. This is effective from 27th Jan 2027. K.N. Radhakrishnan will continue in the role until then and will subsequently transition to a non-executive director role. So these are all of the stocks that we've seen buzzing in trade today on the back of this news flow.
Thanks, Merrill, for that. Joining us now is Rajesh Palvia from Axis Securities. Rajesh, flat afternoon for the Nifty and Nifty Bank. Is this a consolidation phase which we have to go through?
Yeah, hi, good afternoon. So it's a consolidation phase for the Nifty, post beginning of this September series is still Nifty not able to take out the major call concentration area, and it's still consolidating in the range only. So major put base support is placed at around 24,100, 24,000 strikes. So these levels are acting as a support in the decline whatever we are getting. But on the higher side, 24,300 is the major supply zone. But stock specific action is taking place. Some of the sector where continuity of uptrend is there, where a lot of buying interest is still there in the market, though Nifty is not able to take out this consolidation range. Bank Nifty is one notch better compared to Nifty, and here there is a possibility of breakout as we have seen. Bank Nifty is trying to negotiate with its immediate supply zone of 57,800, 58,000 level. So if any breakout takes place above 58,000 level, I think here we may see some breakout trade and possible extension of rally towards 58,400 to 500 we may see. But I think some more couple of days it will require to give breakout, but one needs to focus on the stock specific, pharma, automobile, new age companies. So these all stocks are looking promising, and I think here there are opportunity to deploy some long side of trade.
How do you look at the Nifty, bank now? Especially stocks like SBI and HDFC Bank. We're seeing some long build-up happening there, but it's a range-bound trade for many of them, and we have seen some correction for PSU banks of late.
So Bank Nifty is trying to give breakout of its consolidation range, but again follow buying action is missing in the large cap banking basket. If we analyze the overall banking basket, I think some of the private sector bank have shown some buying interest in last couple of days. So from that space, I think Kotak Bank is looking promising. In here, we have already registered a breakout on daily, weekly time frame. And looking at the breakout, we believe that if it continues to trade above 410, Kotak Bank can extend further gain, and 445, 450 would be the next target on the higher side. Again, ICICI Bank is also showing some buying interest, but still breakout is awaited in ICICI Bank. If I analyze the ICICI Bank setup, if stock able to take out over 1450, then we may see some breakout play, and then stock can support some to the bank Nifty also here. PSU banking basket is still in consolidation. SBI is still consolidating in range only. So follow buying action is still missing in SBI. So maybe some couple of days we may see some consolidation, and I think Bank Nifty may give some breakout on the higher side.
Uh, Kunal, you're looking at support for SBI at this level. If I'm not wrong, it's just about the 200-day moving average. SBI?
Yeah, just marginally above the 200 DMA. In fact, both, interestingly, Sajid, both the 50 and the 200 moving average are just with a gap of, I think, around 10 points, 12 points for SBI, and both of them are flatlined. So that's the extent of the consolidation and the impact this consolidation has done to these long-term averages. Long-term averages flattening out for a period of a week, 10 days odd, I think tells you that the effect of this consolidation has been felt over the last many weeks for the stocks. But yeah, I think largely the stock is still holding on to that 1040 as a support. So 1000 now seems to be a good psychological as well as a round figure support for SBI. The stock is trading about those levels. And with this recent price correction, which we've seen from 1120 odd, is where SBI started to correct. So it's competing like a 10% correction from the top. And generally a 10% correction, a retest of the 200 moving averages, generally become a good entry point for traders who missed out earlier.
Rajesh and Kunal, just hang in there. We'll step into a small break and we'll come back with more.
Welcome back, and thanks for staying with us. I want to quickly mark out TVS Motors. That stock is taking a bit of a knock in trade today, and that's because the existing CEO is due for retirement January 2027, and we have a new CEO likely to be in place on that same date. The new CEO, Mr. Kargar, actually has been part of the TVS Motors Group from 2025, and it's an internal succession choice which TVS Motors has made, and he is currently the president of international business at TVS. But Rajesh, let me come straight to you. Does anything change on charts at all?
Yeah, hi, Harsh. So there is a breakdown on TVS Motor on a near-term chart. Stock is now trading below to 20-day moving average. But looking at the long-term structure, still stock is holding the strength. But yes, for near-term setup, we may see some pressure to remain in the stock if it continues to trade below 4350 level. So that level needs to regain above to again continue its upward trajectory. So above 4350, I think again stock will continue its upward trajectory, and then we could see further higher level also, as the overall long-term structure is bullish. So buy on dips would be strategy. Any decline should be used as a buying opportunity. On the downside, till stock is holding above 4150, I think trend is likely to intact on the bullish side for the counter.
Rajesh, there is aggressive call writing which is also coming in at this point in time. If you look at the put call line graph which the producers can show, suddenly we're seeing a spike in call writing which has come in, and the index is now nearly 1/5% up at this point in time. Look at that spike that's come in just now, just a while back on the call writing. Kunal, how do you see the index, this volatility which is now coming in? People are taking more short positions on to the call writing which is coming in.
Yeah, this is generally, I think, in preparation to what happens during the cash, because we know that between 3:15 to 3:30, the market becomes a little bit more volatile. I think I would sense that this could be probably pre-positioning prior to that kind of anticipation on the index. But largely, I think we are seeing that the put-call ratio, I think I was looking at it largely for the current week, is still at 0.6, 0.65 for the Nifty for the next week. And that, I believe, could probably be an indication that maybe the markets are expecting the move to be a little bit more tepid.
Rajesh, how do you look at the entire cash trading? Are investors looking to square up the position before 3:15? What's your feedback from the market?
So still market is not able to adjust with this case, session. 15-minute window is still, not able to. It's a very difficult for derivative traders, those who are trading in options. Especially the most difficult days are the weekly option expiry days, because you never know where the settlement price will come, and you will end up with the losses if you are in at the money trade. So most of the traders are now, closing their position before 3:15 itself. Those who don't want to take any kind of risk till the settlement price comes at 3:30. And even on the brokers front also, as most of the intraday trades are, getting squared off from the 3 p.m. or 3:05 p.m. itself, because nobody wants to keep their position open till the last moment. So most of the brokers are also doing a square off for the intraday trades from 3:05 to 3:15, in between that period only. So this is what we are seeing since this case has been implemented. But yes, it's difficult for weekly options expiry day for options trader.
Okay, Rajesh, thank you so much. We'll let you go on that note. Thanks so much for joining us this afternoon and giving your perspective.
Thank you.
Okay, we'll slip on a very short break, come back with more. Stay with us. Welcome back, and we have with us Ambrish Baliga as well, independent market analyst. Kunal Bothra continues to be with us. Ambrish, great having you. With regard to Ambrish, curious to know what the view on IT now is, just given the way in which stocks are moving around, and what pocket within IT would you focus on?
I think today's action has got more to do with NVIDIA's earnings than anything else. So I think that's what has, was the trigger for the Indian IT stocks to rally to a certain extent. But immediately, I really don't see a blowout rally as far as Indian IT stocks are concerned, because unless it's quite clear as to how they navigate, AI going ahead, I think that's going to be quite key. And in that, a few of them, at least there is a clear path chalked out. Like, for example, something like a Coforge, I think would be one of those which will be at least leading the way. Along with that, you have TCS to a certain extent, HCL Tech to a certain extent. So I think, if you're talking of IT overall, yes, I think in the next 3 or 4 years, we'll see AI being the main platform. Like the way IT was a service in the last 30 years. I think going ahead, I think India will play a very important role forming a bridge between the creators and the users. So that's what we should be doing going ahead. But the question is, which of the currently listed IT stocks will form a part of that? That's a big question mark, for which most of us really don't have an answer as of now.
Okay. And what about ER&D, Ambrish? That in particular, is there a view that you have there?
Which one?
ER&D stocks, your Tata Tech, Tata Elxsi, KPIT Tech, and the like.
Yeah, in fact, I mean, I've been quite bullish on those stocks, especially Tata Elxsi and Tata Tech. In fact, I mean, if you're again, I mean, out here also, if you're talking of AI, I think they were among the first few to be in the space at the right time. I mean, although the performance hasn't really kept pace in the last couple of quarters, I think the worst of the performance is already done. And we are seeing at least some upticks. So Tata Elxsi and Tata Tech at the current levels, I would surely be a buyer. Again, one should have at least the next 18, 24 months sort of a view to hold on.
Kunal, I know, I mean, you've given your views on IT, and for those who've missed that, prefers the mid-cap names, the Coforge, the Persistent, and the like. Also, ER&D, Kunal, you're constructive on, right? Just kind of putting it out there. Capri Global, that's been a stock, Kunal, which has had a choppy ride this week. You know, we've seen ups and downs. What next on this one? Can this be a trading idea at all for next week?
Yeah, it can be a trading idea, but then again, I think you'll have to be very ready for the stock scaling down. You know, there has to be like a intermittent correction which happens in between for the stock price. Like what happened day before yesterday, the stock was up, I think 6%, 7% on a single day. Yesterday, when the stock traded, it saw profit booking, and today the stock has managed to make a fresh swing high for itself, crossing levels of 263, 264 on the intraday basis today. So that tells you that you'll have to have a slightly higher stomach or a higher risk appetite to try and fathom this volatility into the stock. But I believe that Capri Global is heading to a strong swing breakout. The weekly charts, the monthly charts are now starting to get a little bit more encouraging for the stock. So I believe that it should be a good trading opportunity over here. But it's just that there could be that 10, 15 point of an odd drop or a correction to the stock price, which a trader can try and take advantage of to add or accumulate further.
Okay. Now, new listing, Tempson's, and spectacular listing essentially on D Street. 110% premium to the IPO price is what it's listed at. One of 2026's best listing day gains ever, for this year, of course. But we spoke with the managing director, Vinay Rathi, and he says that the growth has been good for FY26. OEMs will be a key driver of future growth going forward, with strong export opportunities across West Asia, Southeast Asia, and Europe. Listening.
So typically the company has been working with a lot of heavy industries, and now what we see is also, other than the heavy industries, also OEM would be a big part of the company's future growth. And we see the specialized heaters also taking more growth in the near future. And we see the outlook to be quite positive. Good growth rates are possible, and having similar margin profile, whatever we are having today. No, we would be keep on pushing the heavy industry segment, but on the OEM side, we are working with multiple companies, some of them in auto domain, some of them in also other power domain. So we see that this would also add up to the regular growth rate of the companies. Export marginally, I would say, is a little bit better realization than the domestic, and we have been growing slightly higher in the export markets than the overall growth rate of the company. Typically, the markets have been Europe, Middle East, and Southeast Asia. So these are the areas that we have been growing.
That was a Tempson's management, a very good listing coming in, 95% jump from the issue price. But look at the market now. It's given off some of the gains, and see the put call ratio. The calls unwind that is happening now. The put call ratio is almost at 1. So we were at 0.75, and because of the unwind of calls which has happened since 3 p.m. We are seeing that unwind happening on the put call and the put call ratio rising to nearly 1 there. Kunal, how do you look at this?
Yeah, I think that's what the adjustment which was saying, that maybe I think it's just a pre-closing trade which has happened, and maybe the markets will probably settle back into. So I think we are now coming back into that grind where those small spikes in the open interest gets digested very quickly, but the market eventually balances out, and you see the index settling back again into a range. That spike which had happened on the call writers or addition of call writers, it led towards a jump of maybe 30-40 points. But then immediately, I think the index settled back again, and the Nifty has come back to that flattish kind of a move, and the Bank Nifty back again to that 85, 90 points on the downside. So
just said the 315 to 330, now it's between 3 and 315.
it now become 245 to 315.
So half an hour of trading which is happening now, the market close trading.
Okay.
Ambrish, how do you look at this?
Well, at least for us, who are dealing in the cash market, not really in the F&O market. Like at least the day is 15 minutes shorter. In a way, it is good for us because it doesn't make sense elongating the market time. And I'm not really bothered about the sort of fluctuations which happen in the last 15 minutes because being a long-term investor, it doesn't really matter to me.
Okay. Kunal, can you also give us a sense of what's happening in some of the other sectors, especially defense? There's some news which is coming in from the government as well on defense, on the opening up more products for the private sector companies to come in. So, how's it looking on the defense side for you?
See, defense is now in two parts, I would say, in terms of moves. There is a traditional defense stocks, the likes of HAL, BL, etc. And then there are those non-F&O stocks, the likes of Paras Defense, so on and so forth. I think there are so many stocks which have done exceptionally well. I would believe that both these ends are now, clearly demarketing their territory. For example, look at names like Paras Defense, Data Patterns, Heptartech, etc. These stocks have done phenomenally well in the club of the last 6 months or so. Now we compare this with the price performance for the traditional defense stocks, BEL, HL, etc. These stocks have relatively underperformed in the last 6 odd months. So which means that the markets are now trying to move on to the fresh set of stocks which could be a tad bit more higher beta with respect to the defense sector. But I strongly believe that the sector overall would continue to move up higher. And the movement of one sector, one part within a sector, it's a matter of phase or the market balances out. Once the market becomes too heavy on one side, the other side, of the other end of the sector, it starts to participate. I would believe that the traditional defense stocks, HAL, etc., they would make a strong comeback. Even the shipyard names, I was actually looking at many of the stocks in the defense pack, the likes of GRSE, Cochin Shipyard, Mazagon Dock, etc. I think these stocks are now starting to look very attractive. So the move which was majorly seen, or a bigger chunk of a move which happened in 2023-24 for many of the shipyard names, then followed by almost like 2 years of a rough patch or a dry patch rather into these stocks. I would sense that these stocks could make a strong comeback going forward.
And Ambrish, your take with regard to defense, what are you liking and how are you playing defense?
In fact, I also like the ship stocks in the sense like Mazagon Shipyard as well as Cochin Shipyard. I think these are the ones who are actually sitting on orders for the next close to a decade. And it's quite difficult to really replicate. I mean, even for a new player to come in and replicate what they've done is going to take decades, not a couple of years. So, from that point of view, all of them have a major moat. So, something like a Mazagon as well as a Cochin would be on my buy list.
Okay, Mazagon and Cochin, even at these prices, Ambrish, that would still be a buy, right?
Absolutely, because again, here I'm not talking of the next 6 months, I'm talking of holding for the next 18 to 24 months at least.
Right. And one of the other outperformers, Ambrish, has been Ather. Ather Energy has been fabulous. Post-listing, just in terms of the way in which it's performed, as well as the stock move, as well as the management caliber has been spoken about at various points in time. From within the two-wheeler pack, TVS, Ather, Ola, how would you play it?
I think when you talk of Ather, we should also talk about Ola.
That's true.
As to where both of them started post the listing. And you can clearly see that they have crossed each other somewhere. And where possibly Ola was initially, at least sentiment-wise, where Ola was, is where Ather has reached right now. Excellent management quality. Month on month, if you see the numbers, they are better. And on the other side, you had Ola, which was right at the top. Month on month, they started declaring, worse and worse numbers, all, full of controversies. So, clearly moved in the opposite directions. But if you're talking of two-wheelers, among EVs, surely, this would be, one of my picks, no doubt, even at the current levels, because there is still a decent upside. But if you're talking of the older, companies which are, which have been there for a while, something like a TVS Motors is what I would look at, because the sort of strides which they've done in EV. At the same time, the IC two-wheelers also are doing extremely well for them, including the three-wheelers. So I think this correction right now, because of the change of CEO, I think should be utilized to buy.
Okay, Kunal, your view on Ola and Ather?
Yeah, I think Ather has been into a fantastic uptrend. The stock, I think, has just not looked back the moment the stock had broken past about the 1200, 1300 barrier, and from there, I think it's climbed up another 400 plus points for itself. Continues to look extremely strong, very stable chart. Less gyrations, less volatility for Ather, and specifically with the breakout which had happened for the stock price. Ola, on the other hand, I think has been a stock which has been all over the place. Frankly, the stock has been extremely high beta. Just recently, I think 2 months back, the stock corrected from 46, 47 levels to almost 36, 37. And, it's not just a 10-point correction. It's almost like a 20, 25% correction for the stock in a very short span of time. So I think Ola is completely or high beta, or my sense is volatile. And the stock would probably tend to perform well when the market gets back into a higher or better sentiment phase. Right now, I would believe Ather is something which continues to look attractive, looks strong.
Amrish, another set of segment which is doing well is the small cap. We've seen the small cap outperform the benchmarks there. Do you think the earnings which we saw for Q1 for many of the small caps warrant that kind of play now?
Yeah, I think, after so many quarters, we have seen earnings really, outperforming, the expectations which were there. And among them, if you see the small and mid caps, quite a few segments and stocks in the small and mid caps have shown extremely good earnings. And the ones which I would surely be picking up, and in fact, we have done that, for a while, is specialty chemicals, where most of them have come out with better earnings as well as better management commentary. So I think if you're talking of the next couple of quarters, I still see earnings improving for the specialty chemical players, which again have underperformed in the last 3 to 4 years. But I think going ahead, I think we should see much better performance.
And in fact, we've got a special link for everyone. A special piece that has been done by Avi. This Raksha Bandhan, if you had a gift and if you had to gift your sibling shares of a company, here's a ready reckoner to make your decision easier. According to analyst consensus on Bloomberg, HDFC Bank, which has largely remained flat over the last 6 years maybe, could actually see the highest return, a 12-month return on the Nifty 50 index. But what are the other stocks that could give solid returns? Are we here with that list?
This occasion of Raksha Bandhan, I would like to wish all our viewers congratulations, and they can give these other stocks that they can give to their brothers or sisters so that they can remember them fondly. Starting off from the Nifty 50 pack, we can see that HDFC Bank offers the highest potential with a 43% upside, followed by SBI Life, HDFC Life, and Jio Financial, which is sitting around the 200 to 40 range from quite some time with an upside of 32%, followed by NTPC. Up next in the Nifty 500 lot, when we can see that Aditya Birla Lifestyle, BLS International, and Chola Financial is something that can make your siblings very happy for you when the money grows by 60% upside, followed by Inox Wind and Patanjali Foods. So it would be interesting to see that if you give your siblings something from Patanjali rather than a sweet shop. Up next we see the mid cap 150. We can see the stocks like Patanjali, Hudco, Vishal Mega Mart, Sale, and Dabur is also offering some very good upsides, with consensus being in the favor of Patanjali Foods with a 53% upside. As far as the small cap is concerned, we can see that AB Lifestyle, BLS Chola Financial are offering some very good upside, followed by Inox Wind and Kajaria Ceramics also giving a very strong sweet spot for you to consider it as your gift for this Raksha Bandhan.
Okay, all right. Amrish, any picks that you have in terms of Raksha Bandhan picks?
Raksha Bandhan picks, one of them would be KSB. leaders in pumps and control valves, and extremely good sort of order book, 2,765 crores of order book, and major orders have actually come from the nuclear energy capex. Here I'm expecting an EPS of about 21 for calendar year 27. They follow a calendar year, not a financial year. So here I have a price target of about 1,050. And the other one I would suggest is Urban Company, which is clearly a leader in online home services market. And recently they've started that Insta Help, where I think they're getting about 1 lakh plus orders every day. And if you look at the traditional business of theirs, that is making money, no doubt. It's a bit positive, but because of Insta Help's, initial cash burn, like it was a loss for Q1. But I think over the next 3 or 4 quarters, we should see even that, getting profitable. In addition to India, in fact, they're in UAE, Singapore, Saudi Arabia. So I think that global expansion will also add margins over the next few years. So here I see a price of about 210. Again, I'm not talking of long term. I'm talking of the next 6 to 8 months. But longer term, I'm quite sure this can become a multi-bagger.
Okay. Kunal? Your picks for Raksha Bandhan?
I already gave at the start of the show.
These have to be special, Kunal. दो से काम नहीं चलेगा.
Look at what's happening in the market. Nifty is up 0.5%, and if you look at which are the stocks which are driving this change, it's basically Nestle, up 1.3% in cash, followed by SBI Life. Is up 0.86%, Cipla 0.7%, JSW 0.7%. You're seeing a huge run up there for some of the stocks in cash, as a result of which the index is up nearly 0.5%. Among those which are dragging, Shriram Finance down 0.8%. You have Apollo, which is down significantly, and over 0.5% in cash segment. HCL Tech is down over 0.5%. Wipro is down over 0.5%. So the tech is seeing some kind of correction coming in this at this point in time. The Nifty IT, if you look at it, is up 3.42% as a result of which. So the Nifty is up 0.47% as we speak, and you have the Nifty Bank, which is absolutely flat in this today's trade, with the small cap up nearly 0.3, 1/3% in today's trade.
Okay, so that's the tilt. Nestle, what do you make of the move, Kunal?
Well, largely I think FMCG as an overall pack has been underperformer. I believe Nestle also I think has lost its sheen. The stock was one of the better performing FMCG majors till maybe a couple of weeks back. But now with this 3 weeks of correction for the stock, it's fallen down from 1550 levels to almost 1450. So I'll probably avoid the sector as of now. It doesn't look like that it becomes a good contra buy, at least as of now, unless you start to see some signs emerging where the stocks are either oversold on their respective time frames or the volumes make a comeback. As of now, not seeing any of those signals as of now for the FMCG majors.
Okay. In any case, wishing both of you, taking this opportunity to wish you, Kunal, as well as Ambrish, a very, very happy Raksha Bandhan. Hope you all have a very good weekend going ahead. But we still have 10 minutes, maybe 20 minutes to go. So let's try and wrap up as to how markets are doing. In terms of the Nifty Bank, Ambrish, and the private sector banks have been talk of town. But Kotak has been a mover this week among all of the private sector banks. Where is it that you're putting fresh money at this point in time?
In fact, as a contra pick, I've been buying HDFC for a while.
Okay.
Again, it's available at, I think, a 2-decade low sort of from a valuation perspective. But again, here one should remember that it's not going to move up in a hurry. I think it may take another 1 or 2 quarters to show a decent move from here. But once it moves, I think we should see levels of about 1,050, 1,100 decently soon. So again, buying it from a 12 to 18 months sort of perspective.
In fact, IT, I mean, that's really the buzzer today. And Amrish, jokes apart, but just switching back to your pick, HDFC Bank, everyone's been buying on dips, frankly. And everyone we've been speaking to at least has been buying on dips.
And on every dip.
And on every dip, in fact. So, and it's still been dipping. So, I don't know when the dip ends. Kunal, let me ask you that question. When does the dip end?
For the IT at large?
For
HDFC Bank.
The difficult question to answer. It's a very difficult one to answer. You know, technically, the stock is just about... So, you know, we call this as an inertia sell-off for the stock price. The heavyweight selling for HDFC Bank had already happened. You know, the stock fell from 1,050, 1,100 towards 800 mark recently. And then post at 800 mark, the pace of selling has dropped down. And it's just the weight of selling for the stock which has led to another 10% correction as of now. The indicators are still into an oversold category for HDFC Bank, but then difficult to anticipate when this reversal will start off.
Everyone we've been speaking to are saying that they are buying. I wonder who's selling, because someone has to be selling, right, Kunal? I mean, for the stock to keep falling. But anyway, let's switch focus on to more positive things. IT, that's the one. Hiring will be replaced by agentic tools, says Envision Capital's Nilesh Shah. He adds that it needs to be watched how pricing plays out in the space. But rupee depreciation is a crucial tailwind for the IT stocks as a whole. Let's go across listening to a slice of what he said this morning.
If you look at, say, the last 10 years growth for many of the large IT services companies, the growth has been single digit in dollar terms. Okay, so this has really been a single digit growth story. And that's why if you see over even 10 years, they have really not been the huge market outperformers that they were expected to be 10 years ago. You know, so to that extent, I'm not too sure how much of acquisitions will help. I think it's going to be still a reorientation. Okay. The way, for example, some of the digital tech companies in India pretty much kind of disrupted or impacted the growth of many of the other companies. I think similarly in the world of IT services, you're going to see a bunch of smaller, nimble companies who will create smaller pools of people who will use agentic tools to deliver solutions, and they are the ones which will basically deliver much, much stronger growth.
Okay, the other one that's actually doing okay in trade is the Nifty Metal Index. And Kunal, I know that you've been positive on metals all through the week. What next and what's in store for the coming week? How should one position themselves?
I think they should continue to be positioned on the positive side, because we are looking at a turn for many of these metal stocks. You know, it initially started off with Hindalco and I think Nalco, National Aluminium, being the top favorites in terms of the price performance. These stocks rallied up somewhere around 10%, 15% from their recent swing lows. But now there are different stocks altogether. You look at JSW Steel, the stock has surpassed the levels of 1300, looks to be quite strong and poised for a breakout. SAIL, I think, has done exceptionally well. The stock, I think if I'm not wrong, is on touching distance of breaking the 200 mark. And the previous swing high for SAIL was not long back, when the stock, I think, had climbed up to 210 to 15 levels. And from there came a 30% plus correction for SAIL. So for the stock to recover the entire 30%, and that too in the last, I think, few days, I think indicates that this stock has made a very strong comeback. Tata Steel, I think largely, the stock seems to have established a base at the 180 mark. So trade setup wise, this also looks attractive. And Vedanta was the only stock which has been acting as a drag. Of course, post the special situation for Vedanta. And now that stock has also started to show some good volume patterns, strong indicator price actions coming out for Vedanta. So that's another stock looks attractive. So which means that the overall setup for metal stocks, which started off with just one or two names, we are now looking at broader participation. And whenever we generally see broader participation, the rally for the sector lasts, as well as expecting this move to continue for at least another few weeks.
Another few weeks. Kunal, if there's one sector you have to call out for the next few weeks, what would it be? Would it be metals? Would it be something else?
So at the current juncture, if you're asking me, I would look at IT stocks.
IT stocks. Okay. Okay. Interesting. And why is that so? Just the perk-up in trade today? Is there something structural you're seeing?
So, that 3 weeks of price correction for these IT stocks, many of them had fallen down by 7, 8%, 10%. And now today's up move of 3, 4% is starting to look attractive, because we could be now looking at a retest of the previous highs for many of these IT names. So as a trade setup, for the next few weeks, we could be looking at 5% to 8%, which could be a decent gain for a short-term trader over the next few weeks.
And Amrish, coming to metals with you, how would you play it? Ferrous, non-ferrous, or some of the niche plays?
No, in fact, I would play ferrous, which is Tata Steel and SAIL. Tata Steel, I think we should see levels of about 245, 250 again in the medium to longer term. And in the non-ferrous side, I would surely look at Hindalco, where we have seen a decent move already, but still I think at least another 100, 150 rupee further move is there as far as Hindalco is concerned. And when we talk of Hindustan Copper or Hindustan Zinc, there I would be a bit skeptical at this point of time. Hindustan Zinc, again, I don't see much of an upside from here. And Hindustan Copper, anyway, that overfill that happened, so possibly the upside is limited.
Okay. I want to quiz you with regard to pharma as well. Amrish, what's the take there? How would you play pharma at this point of time? You look at some of the stocks, right? I'm just looking at the 6-month chart of Glenmark. Stock is up 20% in a market like this. Divi's has been a non-stop runner as well. So those are your top 2 gainers on the pharma index today alone. How are you looking at pharma overall?
There, in fact, I'll go with the large boys which haven't moved too much in the last year and a half. Something like Dr. Reddy's is something I would look at the current juncture, and even possibly Lupin at the current levels upside of about 2400 to 2600. And what I still believe is that as far as tariffs are concerned, they cannot just touch the Indian pharma companies. Whatever said and done, they can't afford to have like health or medical inflation in US. So whatever talks will happen in between would be just statements coming. It's not going to affect the Indian pharma companies at all.
Could you give us specific names that you like?
No, like I said, I would prefer to have Lupin, Dr. Reddy, and Sanpharma in my list.
At this juncture, at the current valuations?
At the current levels, something like Lupin has corrected from levels of about 2,500 plus to 2,175 or so. So it can go back to about 2,500 again.
Okay, and Tempson's, that was the bumper IPO pop that we saw today, at least in trades. Sneh here to tell us about other bumper debuts that have happened.
Well, yes, so the focus today on the street has been on the newest kid on the block, and that's Tempson's Instruments. And what a stellar listing it's been for this one. 110% premium is something that we've seen for Tempson's. But remember, Tempson's is the first IPO with gains of over 100% on listing day since the IPO of Mamta Machinery that listed on 27 December 2024. Now, we're bringing to you some ET Now proprietary research, and here's a list of all the IPOs in the last 5 years that have seen bumper gains of more than 100% on listing day. The first one is Vibhor Steel, listed on 20 Feb 2024. Issue price was 151 rupees per share, listed at 442 rupees per share, which indicated a premium of 193% on listing. But the stock is lower by 75% compared to its listing over 2 years ago. So that's the kind of move that we've seen on Vibhor Steel. For latent view to 23 November 2021, all the way back is when the stock listed. It listed with a premium of 169%, but the stock is lower than its listing price right now by 47%. Mamta Machinery, we were speaking about this one, 243 was the issue price, listed at 600, which was already almost a 3x jump, and now the stock is around 400, so a 33% trim over there as well. For Tata Tech, all listed on 30 November 2023 with a gain of 140%, and the stock is lower than its listing price right now by 31%. BLSE Services on 6th of February 2024, listed with a premium of close to 130%, and the stock is about 6% higher than its listing price right now, about 2.5 years later. That's the move we've seen on BLS International. And the next one to talk about is KRN Heat Exchangers. The listing premium itself was 118%, and right now if you take a look at the stock listed at 480 and it is at 1600 rupees per share right now. So 4x gains almost from listing day is something that we have seen, 3.5 to 4 times gains on KRN. and heat. Next up, Bajaj Housing Finance listed on 16 September 2024, listing day gain of 114%, but the stock is lower by about 43% right now compared to its listing day price. Tencent then, the one that listed today, listed with a gain of 111%, and the stock of course closed slightly in the red compared to its listing price. Slightly lower is what I mean. The gains have been stellar nonetheless. And lastly, GR Infra that listed on 19th of July 2021 at a listing price of 1716 rupees per share, 105% premium on listing, and the stock, like most of the others in this list, is trading with a cut of 48% right now to its listing price. So most of these bumper listings fizzled out over the last 2 to 3 years, and Tencent today, the one that listed with such stellar gains, let's just wait and watch out what happens with that one.
New IPOs. Thank you so much, Snehi, for that. New IPOs, Ambrish, anything that you're liking?
Many would have got allotment as such. And if you go by the history of bumper listing, I think the lesson learned should be that book profits when the going is good. So I think it's and I suppose most of the retail investors in the IPO market invest only from the point of view of that pop up on listing and exit. I don't think too many of them really hold on to the stocks.
Okay. I want to quickly ask you, Kunal, quiz you with regard to some of the movers this week. Kotak Bank was one of the big movers, at least on the Nifty 50 index, 5% move on that stock. And this is against the run of trade, right? I mean, it's not like private sector banks are doing very well overall, but Kotak has stood out among them. How's it looking now?
Yeah, so it's a surprise move for the stock because it was not nothing anticipated as such, nothing major as in terms of the news flow for the banking names. However, on the charts, I think the initial part of the rally actually happened for Kotak Bank in the previous 2 weeks, where the stock bounced off from its 20-day moving average, took support over there. End of the previous expiry for the August series is where you saw the stock starting to show signs of good price action move. There was positive rollovers for Kotak Bank, and then once the stock managed to break past about the 400 levels, there was a clear shift of stance from call writers starting to take position at the 400 calls. We saw the stock taking good support at the 400 put options. So that clear change of stance from the option writers was also one of the indications that the stock is getting ready for a up move. 425, 430 is where the stock crossed this week. But I still believe that I think there should be more headroom for the stock on the higher side. It's just that now we are looking at a base which was earlier at 370, 375 for Kotak Bank. That's moved up higher to almost 400. So dips closer to 400 mark, I think should be taken as a good buying opportunity.
And stocks like Glenmark, DBs, these ones have started to hit 52-week highs on a recurring basis now. I mean, week after week. How do they look like on charts? Should you still go long on these if someone has already missed this very huge rally?
Yeah, I think so because, Glenmark, Glaxo, I was looking at Zydus Life, you're looking at Aurobindo Pharma, DV Slab, these stocks have done wonderfully well for themselves. The markets are latching on to the stocks which are looking quite strong, and these are the ones which have performed quite well for themselves. And they're the ones where you see a lot of demand, strong volume action. If these stocks are in the FNO, you generally tend to see a higher FNO-oriented activity into these names. But the ones which have not been performing quite well, or the ones which have been into an underperforming spree, you see that lack of volumes, both cash as well as the FNO volumes into these names. I actually believe that Glenmark Pharma at the current juncture could be something to look at even at the current levels. Even after today's up move of, I think, 2.5 or 3.5% for the stock price, still looks very attractive. Aurobindo Pharma is heading back towards a breakout of the previous swing highs from where the stock corrected, I think, a week or two back from those 1700 levels or 1680 thereabouts. So that's another name to watch out for.
Kunal and Ambrish, thank you very much for joining us today. And have a nice weekend.
Yeah.
Thank you. Thank you.
Let's look at, before we close, what's happening in the FNO market. We've seen the Nifty close about 24,175 levels in today's trade. There's some shorts getting added at nearly 3% open interest addition for the Nifty there. Nifty Bank again seeing some flat closing, absolutely flat, 0.02% lower. So it's that flat session for that, but still you're seeing some short positions getting added there in some of the banking stocks of Nifty Bank, especially stocks like ICICI Bank, IDFC, AU Small Finance Bank, Canara Bank, PNB. We saw that some long positions in SGC Bank and Axis and SBI, but despite that, the index holding on to a flat level at close. Look at call and put writing. You can see that volatility that we saw from 245 onwards on the call writers, how the entire the call and put writing moved and how index moved as well, and especially in the last half an hour where we saw some unwinding of positions by some of the call and put writers there. The PCR ending at 0.81 at this point in time. In the call and put writers, you have 24,100 and 24,000 where we have seen a good amount of put writing that came in. 24,200 saw some put writing. Unwind is happening at 24,300 for put writers and for 400 for call writers as well. So there's some unwind that happened in today's trade. There, look at the distribution, it gives you a sense of 24,200 still holding on as a resistance, but good positions getting added, and 24,000 and 24,100. So Nifty finally ending almost 1/3 of a percent lower in today's trade at 24,175. That's what we are going to end this week with. And if you look at Nifty as a whole for the week, it was down 0.3%. So that's all we have from closing trade. We wrap this show and the week with Nifty down nearly 0.3%.